Good afternoon, everyone. Hope everyone is doing well, staying safe, staying sane, and also following the instructions that we are giving daily regarding the stay-at-home rules. Today, I am doing my show, my weekly happy hour show from my backyard, which is a very comfortable place and very serene place, and I hope that I could bring some serenity to you today regarding the mortgage and real estate market and some of the turbulences that are occurring right now and some of the things that are improving. So let's get started with, there's a lot of information out there right now. Everyone's like on information overload between the time we're spending online and social media, and everybody's giving an opinion. So I just want to give you some layman's terms kind of status of what's going on without getting into a lot of complicated economic terms. Because you're going to hear things like treasury bill, bonds, you're going to hear mortgage-backed securities, you're going to hear about the Fed, you're going to hear a bunch of stuff. But the bottom line is that you can make some decisions without worrying about all of that stuff when the time comes for you to make this decision. So let's talk first a little bit about wholesale mortgage. Okay, so right now, the wholesalers, the ones that are the banks, the actual national wholesalers that we use to fund loans, right now their biggest concern is risk. And every time I talk to them on a daily basis, all they talk about is risk. What is their main risk concern? Their main risk concern is that they don't know if the people that they're currently going to lend money to will be employed. So unemployment is one of their biggest concerns because they don't want to make a loan that will have to go into default in a few months, and then they got to buy that loan back. The retail guy has to buy that loan back. So they're trying to avoid that by being cautious, okay? The second thing that they're worried about is nobody knows how many people are going to ask for mortgage deferment payments or literally have to stop paying their mortgage like happened back in 2008 and 2009, and nobody knows what that number is going to be. So what happens is that's another reason for caution and risk. So what they do is they add their own changes to the normal guidelines for their loan programs, and those guidelines make it a little stricter to meet the approval of that particular lender. And I want you to understand that every lender, every wholesaler out there, regardless of the company, is going through this situation. So they add these overlays to the requirements, and then sometimes they'll basically inflate the rate a little bit so people are forced to wait. Right now, one of the things that we're doing is we're staying in touch just about every couple of days with our clients that have loans in progress, because we want to make sure that they still get the best program that we can offer them without them having to go through this extra overlay and paperwork, and also possibly not get the rate that they were originally planning for. So this wholesale risk assessment is real. My personal opinion is that hopefully in the next 2 to 3 weeks, as the crisis that we're going through, hopefully, and we're all praying for this, I know I am, that this improves. As the virus situation improves, the risk goes down, numbers start being seen more clearly on the lending industry side, then the lenders will make adjustments for the good. Because really, we're in a situation where the rates should be a lot lower than where they are today. I mean, we're still closing loans. We're closing a loan tomorrow. We're closing another loan Monday. We got a couple that are closing in mid-April that we were able to lock in before the craziness really started. And so, yeah, we're still closing loans. Our processors are navigating through this every day. We're all in touch with our lenders and communications, even though they're all working remotely. The communication lines are totally open. And the biggest thing is we're keeping our customers abreast of what's going on. So one of the things I wanted to talk to you about next is back in 2008 and 2009, if I recall, people were making uninformed decisions and just all they were doing was just stop paying for their mortgage. And because the guy at the coffee window told them that was the right thing to do, the neighbor who they walked the dog with told them that was the right thing to do, two of the guys they played dominoes with told them it was the right thing to do. So, and a lot of people fell into a trap because it was the wrong thing to do. So what's going to happen in today's situation if you're going to be approved, if you unfortunately lose your job and your income goes down and you're not able to afford that mortgage? The first thing you should do is contact your servicer, the 800 number on your mortgage statement. You need to be transparent, and they have guidelines that they have for these kind of situations, and they'll be following the guidelines that Fannie Mae and Freddie Mac will publish. And right now, everyone is going through the understanding of those published guidelines. Some of them are all out, some of them are still pending, and all the effects that are going to occur for them to approve your situation. Every situation is different. And I'll give you an example. Maybe all you need is a 2 or 3 month waiver or deferment of your mortgage payment. Then that's what you need to ask them. There is wording out there or conversations that the government in their published papers on this is going to have like 3, 6, 9, and 12-month periods associated with deferments. There's also a term called forbearance. Okay, they're kind of similar, and they both basically do the same thing. They're put together to give homeowners temporary relief. I would not stop making my mortgage payment until your servicer has given you written guidelines as to your current situation, because it's not just your mortgage payment that gets affected. It's the principal and interest on the loan, it's your insurance payment on the home, and it's also the real estate taxes on the home and the escrow account that goes along with all of that. So there's a lot of things that get affected, and the government is the one that's going to publish all these rules. So individually, if you have an issue regarding being able to pay your mortgage, my best recommendation is for you to call that 800 number on your mortgage statement and speak with that servicer, okay? Because they're the only ones that can make a decision on what options you will have in regards to missing payments and for how long. You don't want to get into a situation where you just stop doing this on your own and then 2 months later you call them up, then you're going to be disqualified for the initial program. A lot of these programs that allow you to miss payments for whatever period of time, usually they do not report you on the credit bureau if they have approved in writing for you to be able to skip your payments. So make sure that you do this correctly. Once again, don't listen to anybody, because your situation is unique to you. The only people you should be listening to are the servicing department of whoever services your mortgage. If this is something that you need or you're going to be in need of because of employment situation or whatever the situation could be. Each one is kind of like a unique situation. So if you don't have a need, then I would just suggest to continue to make your payments. Don't try to make a strategic type of decision now that I'm going to try to get 6 months without making payments, because if you do get approved, all that money is going to be deferred to the end of your mortgage, and you're going to owe it anyway. So if you can make the payments now, you might as well pay it now and not just add 6 months to the end, because when you go to sell that home or when you go to refinance that home, you're still going to have to pay that as part of the total payoff amount when that occurrence occurs. So let me get my notes here. And the next thing I want to do is a quick recap of the different type of loan programs that are out there. So, last year, the wholesale industry came out with these programs called non-QM, non-standard loans, primarily for the self-employed borrower. And also, it was also nicknamed the bank statement program. Well, last week, all those programs stopped dead in their tracks. They are no longer funding them. They're no longer taking applications. So if you're a self-employed borrower at this time, that program is not available. So high value jumbo loans, these are loans that are from $485,000 and above up to multi-million dollars. Those right now are dependent on the lender or the bank. In our case, we use both lenders and banks to fund these loans. Some of the banks we use here in Miami have stopped their mortgage operations temporarily, so they're not even taking new applications, and they are not even publishing rates at this point like they normally do on a weekly basis. Some of our national lenders are still taking applications on these type of loans. However, they have cautiously put overlays and different additional requirements that normally they don't have. But this type of loan is still moving forward. On the conventional side, depending on the wholesaler, it's still a little bit turbulent. Rates have come down a little bit, but depending on your credit score. So if you've got a great credit score of 720 and above, you're probably still going to get a decent rate right now. If you're at the 620 to 680 range, your rate is going to be a little turbulent, and the guidelines may have overlays that weren't there when the program started maybe a month ago. So these are situations that we're navigating through right now so that we can move the client into the right loan. So for us right now in our processors, this is like a moving target right now. Every day we're looking at rate sheets, we're looking at guideline changes. I mean, stuff is coming in from all angles, and it's because of the current situation. Once again, in 2 or 3 weeks, we're hopeful that this will tone down a little bit. The virus situation will be clearer, and then the lenders will be less, what would I say? They're still going to be, worried about the risk, but maybe the risk tolerance will improve. And then they may start taking off some of these overlays and relook at their pricing. Also, we'll have a better idea of the unemployment numbers. Obviously, today we had a real bad number. It's up to 6 million. The majority of that 6 million is in the restaurant business. And a lot of those restaurants, I heard a figure a little while ago, that about 3 to 5% of the restaurants that have shut down permanently will probably not reopen. So these are legitimate risks that the wholesalers are taking a look at. If you're currently in a loan process, they're going to be asking for a verification of employment right to the day of closing. Our title partner, CNC, has taken every possible precaution and is still actively doing closings in their office, or what they call drive-by, that they do it in the parking lot right out of the people's cars. So depending on the comfort level of the client, they have disinfected their office. They've got gloves for the clients. They've got masks. They're taking every precaution to get the client in and out, signing their documents and getting it done. So FHA and VA is a government loan category, and right now they have also increased their requirements. They've increased their requirements on credit score, and they've added some overlays to their traditional standard guidelines. So if it's an FHA or a VA government loan, then these also have some situations that we got to get through, and hopefully in the next 3 to 4 weeks on those, we should have better clarity. The last category I want to talk about is reverse mortgages. We're seeing an increase of reverse mortgage refinances from the senior community of 62 plus. And the reason they're refinancing is some of them, their savings have taken a hit of about 30%, and they're not sure how long that savings is going to take to come back regarding based on market conditions. So they are asking us for basically quotes, and as soon as they see that they have a good benefit to them in additional funds that they may have lost during the market downturn, they're asking us to move forward. And in these type of loans, we're able to do everything remotely. Their counseling is done over the phone. The package is sent to them via FedEx. We talk to them over the phone, and then we send them an extra pack via FedEx to send us all the documents back. And then we get ready for closing while we process the loan. On the reverse mortgage, regular loans and reverse for purchase, those are still going on. And some of you might ask, why are the reverses not having the issues that a lot of the forward mortgages are having? Well, the reason is that on reverses, seniors don't have to make a monthly payment. So the risk of a foreclosure is a lot less. The senior is only required to pay the annual real estate taxes and the insurance when they're due. So that's a big reduction in risk to the reverse mortgage lender. The last one I want to talk to you about is we were offering over the last year and a half high net value home reverse mortgages, which were privately held reverse mortgages by the lenders. They weren't government insured. Those have come down, the majority of them have come to a screeching halt. The name would be more of a pause until the market conditions improve. Interest rates are less riskier for them, and their risk tolerance in the secondary market as far as reselling these loans will be less riskier for them. And I anticipate those coming back maybe in 30 days or so. In the meantime, everything else is moving forward. On the real estate side, we're still dealing with customers. Listings are being shown through video. That's another important reason when we list a home that we have pictures and video taken. And right now, when I get a call for one of my listings, I basically send the buyer side realtor a copy of the video and pictures through a unique website that we have for each property. So instead of physically going to the property, they can actually go online, see about 30 to 36 pictures of the entire property inside and out, and then there's a 1-minute video that they can watch. And if they want to place an offer, they can place an offer with contingencies of the time on the inspection period, the normal contingencies that contracts have, and maybe add some timing so that during the inspection period they can physically get in and see the property. Another change is the appraisal, the way appraisals are being done right now. The government has approved for drive-by appraisals during this crisis. So right now we have clients that are in process, and basically we order the appraisal like we normally do. The appraiser goes out, does a drive-by and takes pictures of the outside of the home, drives, through the neighborhood, takes a few other pictures, and then they go back to their office and they basically use the comps and the internet to complete their report based on recent sales and things like that. The only thing that appraisal will not have is the inside pictures of the property. So there's a little bit of concern there, because if you have a home that is very much been updated, you may not get credit for those upgrades being in place because the appraiser can't get in there to see it. So there's negotiations going on between realtors as far as extending time frames, moving forward under the current conditions, because maybe that other person sold their house already and has to move out. So what I'm doing is I'm taking each situation individually, working through those issues, and just moving forward as best as we can during these current times. Now, as a realtor, we are part of the essential group that is allowed to go out. I will tell you that I'm going out very cautiously. It's like Saturday, I got to go out and take some pictures of a potential new listing, and I'll be asking the people to stay outside the house while I go in and I take some pictures on the inside, the outside, and the backyard. And then I will deal with the client over the phone, and I will email them the pictures that I took, and have a conversation over the phone about what we need to do before we put that house on the market. So, things are happening. Yes, they've slowed down a little bit. Obviously, we're all at home. But I anticipate, and I'm hoping, I guess I'm hoping more than anticipated, that in the next 2 to 4 weeks, we will have a better picture about how we're going to be moving forward, and all the restrictions that we currently have. So all I could say is stay safe, follow the protocols, and if anyone has any questions, feel free to give me a call on my cell, 305-588-0451. Stay safe, stay well. I'm praying for all of you. Thank you.